Maya's car starts making a noise that sounds expensive because it is. The repair shop wants $400. A customer with savings pays, complains to a friend, and drives home. Maya has $86 until payday. So her $400 problem bill comes with 3 doors. Put it on credit, delay the repair and risk missing work, or pay now and hope rent develops a generous personality. The repair did not become more complicated. Maya simply had fewer ways to answer it. And that is the strange math of being broke. The less room you have, the more ordinary life can charge you. This is not because every low-income person pays more for every product. It happens because money buys something before it buys luxury. It buys options. In the Federal Reserve's latest household survey, 63% of adults said they would cover a $400 emergency with cash or its equivalent. 15% would put it on a credit card and pay it over time. 12% said they could not pay it right now. Those are not 3 payment methods for the same experience. For the first person, the emergency costs $400. For someone borrowing, interest may join the bill. For someone delaying, the real cost depends on what breaks next. A tow, a missed shift, a replacement ride. The original invoice starts inviting friends. Maya puts the repair on her card because the car is how she reaches work. That solves today's problem. It also leaves less room for everything scheduled tomorrow. Her phone bill processes Tuesday morning. Her paycheck arrives Tuesday afternoon. For a few hours, the money exists in the future while the bill exists right now. Depending on her bank, account settings, and transaction, that timing can mean a declined payment, an overdraft, or another fee. The computer does not lean back and say, "Payday is at 2. She seems nice." It sees the balance and continues being a computer. The Consumer Financial Protection Bureau found that roughly 1/4 of consumers lived in a household charged an overdraft or insufficient funds fee during the previous year. People charged frequently were also more likely to have weaker credit and little financial room for another shock. The fee is not proof that someone never earns money. Sometimes it proves that income and bills arrived in the wrong order, and not everyone has the same financial doorway. The Federal Deposit Insurance Corporation found that 4.2% of American households were unbanked in 2023. Another 14.2% were underbanked, meaning they had an account but still used certain non-bank financial services. That does not mean every one of those households was trapped by a terrible product. It means access is uneven. If the affordable bank, the useful credit line, or the low-fee account is not available when the emergency arrives, the remaining options may cost more. The market still offers Maya choices. It is just charging admission to the better ones. Now Maya needs the car more than before, because missing work would make the next bill harder. But the repair reveals a worse problem. The car is near the end of its life. At a dealership, the salesperson asks the question that makes expensive contracts sound friendly. What monthly payment works for you? Maya names a number. The loan stretches until the payment fits. The car did not become cheaper. Part of its price was pushed into the future and renamed manageable. Credit scores, income, debt, down payment, and lender type can all affect the rate a borrower receives. In one CFPB study of subprime auto loans, average rates in its sample were around 10% at banks, compared with roughly 15 to 20% at finance companies and buy here, pay here dealerships. The researchers did not claim every borrower or loan was identical. But after adjusting for several observed differences, their example found that lowering a typical borrower's rate from 13% to 9% would save around $900 over the loan. $900. Same transportation need, a different access to money. And owning the car does not end the access problem, it merely changes its costume. When Maya's car is unavailable, the nearest supermarket is no longer the nearest supermarket. The nearest store is whichever one she can reach before work, after a bus transfer, while carrying everything home. That may be a convenience store with smaller packages and fewer choices. Buying the giant economy pack would save money per item. It would also require more cash today, somewhere to store it, and transportation capable of moving a box large enough to qualify as furniture. USDA research found that low-income households facing limited vehicle and supermarket access spent a greater share of their food money at convenience, dollar, drug, and other small stores than similar households with easier access. Another USDA analysis found higher variety-adjusted food prices in low-access urban areas when households were constrained to shop locally. The lesson is not that everyone without a car shops badly. It is that distance can make the decision before the shopper arrives. Then Maya's landlord announces a rent increase. She finds another apartment advertised at a monthly price she can handle. For about 12 seconds, the internet has solved housing. Then the cash wall appears: application fee, security deposit, advance rent, utility setup, moving costs. Possibly another application if the first one fails. HUD published research describes these move-in charges as barriers that can determine whether a renter can afford an advertised unit. A separate HUD policy review found that rental application fees can range from about $50 to several $100s, depending on the market and property. So an apartment can be cheaper every month and still be unreachable today. Maya may remain in the more expensive place because moving to the cheaper one requires money she does not have. This is where the pattern finally becomes visible. A person with cash can absorb the repair, avoid the badly timed fee, shop among lenders, reach more stores, move when the numbers make sense, pay annually when there is a real discount, wait for a sale, buy the useful quantity instead of the smallest affordable package. None of these is a secret rich person coupon. The discount comes from being able to reject the expensive option. Maya cannot always wait. Urgency is sitting beside her at every negotiation, loudly announcing that she needs an answer today. Salespeople love that guy. This does not mean every fee is unfair, every lender is predatory, or every cheaper product is a trap. It means limited cash can narrow a person's choices until the available solution carries extra interest, extra fees, extra travel, or extra risk. Return to the repair shop. Two people received the same $400 estimate. One paid for a repair. Maya paid for a repair plus the consequences of having fewer alternatives. That is why everything can feel more expensive when you are broke. Poverty does not only reduce what you can buy, it weakens your ability to wait, compare, absorb a surprise, or walk away. The quietest luxury money buys is not the car, the apartment, or the giant box from the warehouse store. It is the sentence Maya could not use when the first bill arrived. No, I can choose something better. You cannot budget your way out of every low wage, housing shortage, or broken transportation system. But you can identify the charge created by urgency, the repeated fee, the loan built around the payment instead of the total, the cheaper option that requires cash today. Because the first step is seeing what the system is actually selling. Sometimes it is not the repair, the loan, or the apartment. Sometimes it is access to a choice.